Today, no Santa rally here. Market update for the 21st of December 2021. Hello again, it's Martin North from Digital Finance Analytics, World Notice Post covering finance and property news with a distinctively Australian flavour. And just before we start, a quick reminder that tonight on my live stream at 8 p.m. Sydney time, I'll have Leif van Onselen on from Macro Business. And he's going to talk about the prospect of another lost decade in Australia due to the mismatched economic strategies that are currently in play. He released a report this week, which is very interesting reading, and he's going to take us through some of those key points. So join us at 8 p.m. Sydney time. And of course, as always, you can ask a question live via the YouTube chat. Well, investor sentiment continued to sag on Monday as concerns about President Joe Biden's economic agenda and the Omicron coronavirus surge dragged down stocks. Traders said that low volumes ahead of the holidays have exacerbated market moves. The S&P 500 had its biggest three-day drop since September, led by losses in financials and materials shares. And the dollar, though, was little changed. There's kind of two dynamics going on. Probably the most important one is the imminent reduction in liquidity, said Jay Hatfield, Chief Executive Officer at Infrastructure Capital Management. On top of that, you have the Omicron concern. Goldman Sachs have cut their US growth forecasts after Democratic Senator Joe Manchin blindsided the White House by rejecting Biden's roughly $2 trillion tax and spend package. Now, Manchin later on Monday appeared to extend an olive branch to Joe Biden. However, he hinted that he'd be willing to back a less costly version of the Build Back Better plan. And meanwhile, Europe's biggest nations weighed more COVID-19 restrictions. The S&P 500 fell 1.2%, the Dow Jones Industrial Average lost 1.2%, and the Nasdaq slumped 1.2%. Omicron news is dominating the headlines in the final trading days ahead of the Christmas holiday, following reports that the new variant has been identified in 43 out of 50 US states. The US wave of Omicron is projected to be in the steep part of its exponential growth in 2 to 3 weeks, just as we turn the corner into the new year, said Morgan Stanley. Cyclical stocks, those that move in tandem with the economy, were the hardest hit, with banking stocks leading financials lower as US Treasury yields were softer. Credit Suisse fell 2.56% and Goldman Sachs dropped 2.67%, while Wells Fargo slipped 2.29% and BlackRock was down 1.77%. The overall financial services index dropped 2.27% to 639.39. Of course, falling Treasury yields hurts the net interest margins of banks, the difference between the interest income generated by banks and the amount of interest paid out to depositors. In fact, though, the 10-year was up 1.7% to 1.426, while the 2-year was down 1.29% to 0.6337. Energy, meanwhile, struggled to cut losses as oil prices remained under pressure, though they did bounce off their session lows later. Big tech also soured investor sentiment, with Apple and Amazon and Facebook and Google and Microsoft all ending the day in the red. Though one bright spot was Carnival, which rose 3%, shrugging off the COVID jitters after forecasting a profit in the second quarter of 2022, driven by strong advanced bookings for the second half of 2022 and 2023, hopefully looking beyond the current COVID crisis. WTI oil was down 2.47% to $69.11, and gold slipped back below $1,800 to $1,789, down 0.83%. As trading volumes were so light in the run-up to Christmas, of course, that drove volatility, and the VIX was up 0.03% to 22.87. Expect more volatility ahead as we go through the Christmas and New Year period. No Santa rally here. And in crypto land, Bitcoin was sitting at around 47,000, just slightly higher, but still significantly down from recent highs. And Ethereum was at $3,000 930, up just slightly, but again well down from recent highs. Interestingly, the prices of Ethereum and Bitcoin seem to be tracing much more closely now the dynamics of the overall market. Just to highlight the volatility in crypto land, it's interesting that the BetaShares crypto ETF in Australia, which hit highs of over $12 just a few weeks ago, is now sitting at $7.76. And as we go into the opening this morning, the ASX 200 futures is pretty much flat at 7,203. Now, if you're buying your home in Sydney's contentious market, you don't need to stand alone. This is the time you need to have Edwin from Ribbon Property Consultants standing alongside you. Buying a property is both challenging and adversarial. The vendor has a professional on their side. Emotions run high, price discovery and price transparency are hard to find, and then there's the wasted time and financial investments that you make. Edwin understands your needs, so why not engage a licensed professional to stand alongside you? With RPC, you know you have experience, knowledge, and master negotiators looking after your best interests. So shoot Ribbon an email at info@ribbonproperty.com.au, and if you use the promo code DFAWTW/Martin, you can get a 10% discount offer. I'm Martin North from Digital Finance Analytics. Many thanks for watching, and I'll see you again next time.